Thanks a lot for the great intro. So this is the last bit of content for the day, and also the last bit of content for a feature that CoinDesk launched, or I guess began a little over a year ago through our editor-in-chief, Pete Rizzo, who really said that the 10-year mark of Bitcoin required us to really recognize the history. 10 years is certainly a mark. So we published a tremendous bit of content, a multimedia package back in January. We went to Scaling Bitcoin and recorded all the core devs that helped build the network. We did a whole section on untold stories and the folks that were behind all of it. And we closed our big show in May with Adam Back and Patrick Byrne on Bitcoin at 10. And so now this is the last bit of content in that package that we developed over a year ago. And we're here with an investor and an entrepreneur and someone who has been involved in this from the very beginning. So I know you've told your origin story with Bitcoin several times, but I want to get into, how did you acquire your first Bitcoin? What year was it and what price did it trade at?
So when you're in the venture business, it sometimes feels like you're in the fashion industry. Like every 12, 24 months, you're going from internet to cloud to social gaming to any genre that's hitting. And for me, Bitcoin was first learned about in 2011 here in Singapore. So Singapore is very near and dear to me. I bought a company here 10 years ago and been traveling back and forth and never heard about Bitcoin in the US. It was all Asia-centric. And so in 2011, learned about it. And back then, like many people still today, it was like, too good to be true. You can mine it. You had this golden goose that produces Bitcoins. And it was super interesting, but I discounted it initially. And
As everyone does.
Yeah. And then like a year later, it kept eating at me, and I read the white paper, and the more technologists I spoke to that knew open source, that knew cryptography, they were like, yeah, this is super cool, spending all my time on this. And so you have enough people in your network that tell you that this makes sense, you start going down that rabbit hole. So by 2013, I started investing in Bitcoin and then started investing in a lot of the bridges, roads, and tunnels of the ecosystem, which means anybody that was walking around a Bitcoin conference with a pitch deck, got to know them. And this was like wallets, exchanges, payment processors, miners, some of the early software layers, like Coinbase, Kraken, Zappo, BTC China. And that was more of like trying to get an education in the space, trying to develop the heat map. But back then, everybody was just like, what's going to become of this new tech of Bitcoin?
But you definitely got into the user adoption part, and you became pretty notorious for giving out Metcalfe's Law way, giving Bitcoin to folks to get them onboarded. How much do you think you've given away over your life?
Quite a bit, but it was more so, a lot of it was anytime you go to a big fintech conference and you see somebody interesting, or somebody's got a bigger megaphone, right? Because Bitcoin, we're at the 10-year mark, and we still can't use Bitcoin or crypto to buy coffee across the street or whatever. And so trying to find people with bigger megaphones, bigger voices, and so everybody from Bill Clinton, Richard Branson, Kim Kardashian, I've given them their first Bitcoin, and it creates a dialogue. I give them, it's like an antithesis of how you want to give somebody Bitcoin, but I give them physical Bitcoin, which is, I remember
it's like when Bobby was
conversation starter, yeah, to give them, the physicality of it when you're discussing it helps. And so not as much as my co-founder. My co-founder gave like over $100 million away in Bitcoin back when there was like Bitcoin faucets. You could like stick your hand out and grab 1,000 Bitcoin. It was kind of insane to think about it these days. So yeah.
Now, you definitely had a bird's eye view right from the start, and to some of the dumpster fires even, Mt. Gox. Tell us a bit about what was going on then and how you tried to interject and solve a problem that you saw as damaging for the industry. Yeah, so
when Mt. Gox failed, I view that, I tried to find an opportunity out of that. So that week before its bankruptcy filing, so I was in Tokyo with Mark Karpeles for a week trying to figure out what the center of that whole mess was. We wound up buying Jeb McCaleb's stake that was 12.5%, wound up buying Mark's 87.5% stake, and then went into bankruptcy, so that got all messed up. But we're trying to like find a way to like do what Bitfinex did, where they had a massive hole and they filled it up and then wound up paying it back. This was at a bigger scale, so it was a lot harder to pull off. So it was tough, and the brand of Mt. Gox it just started to get toxic, and so it was hard to do what Bitfinex did when they were very innovative when they kind of structured a way to get out of that gully. Couldn't really apply the same logic to Gox, but it was fascinating at the time to see that, spend time there. And lo and behold, out of that calamity in Japan, Japan's one of the best crypto markets on the planet. In terms of regulatory clarity, licensing, and just the institutional vibe towards crypto is way better.
Well, it's part of this idea of democratizing investing and democratizing finance. That doesn't mean everyone just wins. There's hard lessons for everyone too. Investing is hard, and I think that was something that became apparent, that this was something to invest in that wasn't quite ready for the types of attention it was getting. So let's move on to scaling, right? We had the big wars of scaling. And you're a person who invested in engineers. You invested really in the people building. I always saw scaling as this Silicon Valley mindset of fail fast and break things coming into direct contact with the cryptographer's mindset, which is, hold on, this is not a video game. It's either bulletproof or it doesn't work.
Yeah.
And they came into conflict, right?
Yeah, I mean, I went to some of the early scaling Bitcoin conferences because I didn't actually understand what was happening. I didn't understand what the dynamic was relative to scaling and the big blockers, small blockers. And so I went to one of the early ones in Hong Kong, and I sat in the front row and I listened to everybody. And what you realize quickly is that some really smart people are trying to fix hard problems in Bitcoin every day. His core devs are amazing. And then there was some dynamics in terms of where things were going to go roadmap-wise, and like the core devs were asking miners were asking core devs, and there wasn't a lot of alignment or people on the same page. It was still very chaotic, as you would imagine in this kind of digital cooperative that is Bitcoin. And then as the kind of the scaling debates increased and the kind of the tensions and dramas started, it was interesting to watch that. And then people are look back on that as like not a positive thing, or there was a lot of drama. I think it's an amazing thing because this organism of Bitcoin is very organic. It stresses, it heals, it finds a way to continue to iterate, and that dynamic of the scaling, the big block, small block size, was a test of Bitcoin, and it was a positive test. And I think it's going to get tested more and more over time on a grander scale as governments, as big tech, as Wall Street all kind of enter into this space, be more pressure testing in certain ways as well.
So we're moving through time here, and we're coming up to the 2017 bull run now. And even I'll attach that to the current trade war, let's say. I have an idea. We've all got worldviews, right? Everyone's got a worldview. We have a worldview around Bitcoin. And in my mind, the way you test your worldview is its ability to predict the future, right? So if your worldview is accurate, the things that you thought about the future from that worldview become true, and you test and validate it. So as the 2017 bull run began, of course, everyone had thought that this would be a great innovation in capital markets. Everyone had been talking about that for years. Wow, this is going to be a fantastic way to raise money. And then all of a sudden, everyone was right. It worked. And you were right in the middle of that, and you started experimenting with that stuff, and you ran a Dutch auction, and you started really experimenting with the different ways that money can be raised. So bring us back to what it was like to see your worldview validated at such a large scale, and what it meant for your enthusiasm and all the rest of that.
Well, I think with Ethereum and being able to crowdsource capital for projects was super cool and necessary. It's like people sometimes lament about like the speculative nature of crypto, and it's like the trading, the betting, the gambling, and that whole dynamic that people are trying to put focus on. But to build out these networks, money networks, identity networks, Web3, you need speculation and capital to fund these projects. And so it's part of the equation. And seeing that, seeing the dot-com crash and seeing the effervescence of crypto kind of play out, and not all of them are going to be, come out smelling like roses. Some of them are going to make it. Some of them are going to realize they have really hard technical challenges. Some of them are going to realize the go-to-market is going to take like a decade to get distributed compute or storage or anything else to be of consequence. And so it takes time. But the ability for projects to source capital that way was, I think, a profound kind of dynamic. And now we're seeing better dynamics on how that's done. So you heard the IEO, some of the exchanges doing IEOs, and it's more of a curated ICO. They kind of vet out the projects, and so we're getting a little better and more thoughtful about the diligence and the structuring and the rest of it. And people are like, well, altcoins and utility tokens are gone over, and Bitcoin is truly remaximalizing. I mean, it's, the market share of crypto is profound with Bitcoin, and Bitcoin's getting more and more dimension between, store value and then payments with Lightning and then smart contract with RSK, and, you're kind of seeing some evolution of Bitcoin. That being said, utility tokens and these new digital cooperatives that are forming around other areas, I think is really some of the cool dynamics spilling out of crypto. It's like distributed compute, storage, all these things will absolutely be a thing. And so, throwing the baby out with the bathwater is, I think, a little much. I think it just takes longer for these networks to get to market in the right way. So I'm still a big believer in token sales, tokenized networks, and at Block, that's literally all we do is we build infrastructure for tokenized networks, and then we build new platforms and protocols as well. But you'll never hear us like trying to put cabbage on a blockchain and trying to track and trace it from wherever. There's other people that'll do that. So tokenized networks have the right incentives where you contribute and then everybody shares in some of the benefits of that. So that model, the business model, is incredibly strong and compelling.
So going back to that worldview, and you brought up Bitcoin as part of this remaximalization effort, and really now let's look at the global stage again, right? We've been talking about Bitcoin as a macro hedge for quite a long time. I even have always sort of believed that Satoshi Nakamoto took the Japanese pseudonym in order to have, let's say, the credibility to say what happened in Japan is now on your doorstep. The lost decade of the 90s is now what has come to America and really the world through America. And here we are in the trade war. And while Bitcoin might not be on the main stage of the trade war, it is certainly in the wings. Yeah. So what's it like to have that sort of worldview that that the negative yielding debt that we've accumulated will actually be an albatross for sovereign governments, and that perhaps the monetary policy levers that they have to play are becoming as useless as a lot of the Bitcoin people predicted. Yeah. What's it like to see that on a global scale and to be in the middle of that?
Yeah, I mean, you have this confluence of events with the trade war and a lot of dynamics, a lot of these intersections are kind of happening at the same time. The question is Bitcoin ready for that, right? And you think of the institutional investors, whether it's big sovereign wealth funds or the state of Wisconsin Teachers Pension Association, do they have exposure in Bitcoin or crypto at any consequence? The answer is no. And this notion of institutional investors being around the corner for the last 2-3 years, I think finally now there's better visibility on institutions coming in, and you're seeing better custody platforms, better regulatory clarity in certain jurisdictions, and a lot of these institutions need that. Despite it having all these attributes of being non-correlated and all the kind of unpacking of how Bitcoin can juice a portfolio, the access to it at any scale for these big institutions is getting better. And so I think as that continues to mature, the custody, the wallets, the tax regimes, the jurisdiction, asset protection, all that stuff it's kind of happening in real time. Most of it's still wet cement. And so as that starts to cure, as that starts to scale, I think we're kind of on the precipice of all that, you know. So this next year, and look at all the data points between Square and Fidelity and Bakkt and you know, a half a dozen other ones that are unannounced. It's happening. It's not a question of like, is this going to happen? It is happening. And so it's going to take some time. The question is like, if there is some massive world calamity, is the connective tissue between these big institutions ready for it? And I think it's getting close. I don't think it's exactly ready right now, but it's getting closer than we've ever been.
So now, Matt, I remember being at an event, I can't remember which one it was, and you know, I was talking with another colleague, and you know, you were working the room, and everyone knows you, and smiling, and he said, you know, I think Matt Roszak has the best work-life balance in this industry. You're a guy who's been in the middle of all these things, you're involved in all these projects, but you still seem to be having a good time. How do you maintain that work-life balance? I've seen so many people get burnt out from all of this stuff. I mean, scaling wiped out a whole portion of the community just because they couldn't deal with it anymore. You know, it's happened multiple times on multiple levels. The ICO thing did the same. People just left after that, you know. What keeps you going? What keeps you smiling?
Generally, I think we're still in the stone ages of crypto. We're still super early, and so there's a lot to do. You know, I for the first time in my life, I feel like I'm part of something that is going to change the world. You know, you're in tech long enough, you invest and do startups, and you're an entrepreneur. And my background is like usually building software that's really pragmatic, whether it's HR or you know software or whatever. But for the first time, I felt like this is something I could be a part of that's going to change the world, or at least make a dent in that proverbial universe. And so that's the kind of the calling I've had early on. So some days feel less like work than others, but the work-life balance is, you know, always surrounding myself with the best people. Like my co-founders, Jeff Garzik, he was the number 3 kind of core dev, went from Satoshi to Gavin to Jeff, literally in the earliest days of Bitcoin, and you know the networking in this space. So even going to these conferences, huge utility. You know, sometimes it's like, you know, and I've been to quite a bit of these conferences, and sometimes I wake up in the morning, you know, before going to a conference, I'm like, man, what is going to happen here? And it's like, you know, most times out of 10, I show up, I learn something, I meet somebody with a new idea, I confirm a data point. I always find a ton of value in coming to these things. And so, you know, surrounding yourself with the right people, technologists or you know, kind of finance folks, go-to-market folks, et cetera. And that's the other thing that's kind of super cool about this space. It's like so multidimensional between trying to figure out, you know, the history of money to, you know, how a central bank works to all these different things that you try and unpack to build that view or that compass that you have in this space. It's fascinating. It's like you're always kind of learning something. But to kind of scale that, you got to have a great team, got to have great people, and I've been lucky to you know have some great entrepreneurs that I've partnered with over the years.
So you know, you mentioned crypto is in the Stone Age, and I want to pick up on that, and I want to kind of combine it again with this worldview, combine it with predictability, and combine it with a question on you know, we're done 10 years of Bitcoin. Talk a bit about the next 10 years. And talk a little bit even about what you just said about coming to events and meet people, because you actually said something to me yesterday that really got me thinking. You said the internet is in a feudal era. So you said crypto is in Stone Age, internet is in a feudal era. And what I understood from that was you've got these fiefdoms, you've got Google, you've got Facebook, and all the plebes, you know, contribute to the wealth of the manor, of the castle.
Yeah, the internet's not like what I thought it was going to be. Like early days, you know, you had, you know, silver platter kind of internet, like between AOL or Yahoo, just would curate, give it to you. And then we're in this kind of middle internet, like the medieval times or middle ages of the internet, where the revenue models are ads that we avoid, you know, online, whether we're on Facebook or Google, et cetera. But that's the cash juggernaut that finances and has built the value for these platforms. It's awesome to see, you know, Facebook with 2.4 billion people and the utility of Google and all the properties it has around, you know, YouTube and Android and all the other things that Google has done. but the revenue model, the business model is kind of like not that inspired to me, right? So when you look at Web3 and like what the new internet is going to look like, where you have better privacy, security, control of what you do, or if you participate in something, you're going to get paid for it. Whether my attention, for an ad, I get paid for that, or if I participate in a digital cooperative or something, then I get paid for that. So it's a lot more of a, you're a better participant in these networks than just being what you call it, a plebe or
contributing to the empire.
Yeah, and kind of like using you, and it's like, and I think that the structure and nature of companies, that's why I always see these digital cooperatives and the utility tokens align all that so well, versus us being users of all these systems and all the proceeds go to shareholders, all the value accrues to shareholders versus the users. So I think if that's done well, I think these networks get very powerful, very valuable, and we all participate in that, which is kind of a cool change.
So Bitcoin in the Stone Age combines with the internet in its medieval form and creates what? What does it look like?
Creates a new internet, where you participate, and if your data is shared, or if you share your data or your attention, or you watch an ad or what have you, you participate in that upside, and then you have different dynamics of privacy and security. Like Facebook and Libra has just been tortured, by regulators about a lot of things, and rightfully so, because we never get a check from Facebook or Google for what we do there, and so I think those dynamics, once they start to change, and you could actually participate, I think that's a super cool thing. And this is all beyond the be your own bank and kind of manage your wealth a particular way, and then there's like a half step that's happening too in STOs and tokenizing real world assets. So you see a lot of people walking around tokenizing bars of gold or real estate or cap tables. That is a really important, I think, stepping stone for institutions, because it's one thing to go to an institution and say, there's this thing that's distributed compute or storage or whatever, and the kind of eyes gloss over. But if you say, we're going to tokenize, fractionalize, securitize a building, they get it, right? And those tokens that represent that fractional ownership, and the wallets, the exchanges, the custody, all that stuff, all that infrastructure will position them well for all this other stuff that's getting built. Mm-hmm. And so I think that's it's not why I got into this space, was to tokenize a hotel, but for institutions, they get it, and that'll help them usher to a lot of this other stuff that is really cool.
So last question. We're sitting here, Bitcoin at 20. Are we even talking about how many buildings have been tokenized and how many are still traded with paper? Is it just a fait accompli and we're talking about something else totally? Or maybe we're not even conferencing around Bitcoin because it's such a part of our lives. I mean, we don't conference around the US dollar, right? Well, where are we at in 10 years?
It's a great question. So I thought by now we'd be using Bitcoin to buy stuff. But here we are 10 years into the ball game. And usually when you look at any kind of consumer adoption curve, whether it's microwaves or dishwashers or automobiles or telephony, it takes about 10 years to get to 10%, and then another 10 years to get to 90%. Mm-hmm. We're kind of 10 years, and maybe we could round up and say we're at kind of 10%. Is the next 10 years going to shoot us to 90? I don't know. Mm-hmm. I think it's going to be a little bit of a curvy path because of the regulation, because of money being so important for governments and banks, et cetera. So I think that second 10 years is going to stretch out, and the adoption curves are going to get a little longer, but the momentum is there.
it's not a video game. It's not Zelda. It's
Right.
not the Nintendo generations.
Well, that's how we are. That's how we're wired. If I say, hey, download this photo app so we could share, our pictures of food, and that's one thing. If I'm saying download this wallet and put your net worth on this, different trust factors, your bar is a lot higher. And so, and we're tribal. You tell me to do something, I trust you, and vice versa. And so, but that how that evolves and how that gets adopted is going to take time. Because it's money factors versus, not.
So one of the lessons, I guess, is that, within cryptography, they have their own considerations. It isn't like computer programming. It's either bulletproof and it can be shipped out because it's unbreakable, and therefore it can fulfill its role. So, is that something you tell folks? Look, this is not the same as other internet, trajectories. We have to make sure the developers have this right on before it's deployed.
And look, I mean, you look at the last headlines. I was just like describing Bitcoin to my hairdresser, and I'm looking at myself in the mirror, and I'm like, wait, if listening to this, she's just like, it's going way over her head. And so we got to make it a lot more simple. And I think most people, won't know they're using Bitcoin or crypto underneath the hood. But the next 10 years, a lot of assets will get tokenized. I think institutional investors will say, if you're not tokenized, I'm not going to invest in your building or your project or whatever. So I think the tokenization of things, medium long term, is a absolute in my opinion. The near term is still, we got a lot of work to do on adoption and usability. And again, back to most people today, they think back the last 10 years of headlines between, it's drug money, there was a hack at this exchange or this wallet, et cetera. And it's hard to then convey that, well, Bitcoin has never gone down. That has been, solid as can be. But we're humans, and so these headlines kind of compress the adoption curve. But momentum continues to build.
Well, momentum continues to build is a good note to leave off on. So everyone, please thank Matt Roszak for his time and insight.
Thank you. Thanks, man.